Bitcoin has just reached a decision point that could define the rest of 2026. After a powerful move in April, price is now pressing directly into major resistance at the yearly midpoint, a level that often marks either continuation or exhaustion. And what happens here doesn't just affect the short term, it sets the tone for the entire market. So where does this fit in the bigger picture? For those who follow us, here's the structure of our analysis. We work through 6 pillars: position, pattern, price, momentum, volume and volatility, and time, all sitting within an overarching macro outlook that incorporates correlated markets. You can see how we apply this in a practical way, and it ensures we take a balanced and objective view before placing a trade. Let's start. Let's zoom out and establish where we actually are. On the yearly time frame, Bitcoin is sitting right at its midpoint, and this is a decision zone. Neither bulls nor bears are in control here. This is the level where the market has to make a decision, and how price responds here sets the tone for the rest of the year. Dropping down to the monthly, one level has been dominating price action: the February high at $79,344. That level has acted as a ceiling for months. April came in and tagged $79,486, barely pushing above it. But what's significant is that April closed on its highs. That's a statement from the bulls. Now here's where it gets interesting. That April high has done something important on the weekly time frame. It has caused the weekly swing to flip up. However, it remains a lower swing high, meaning the weekly downtrend structure is still technically intact. On the daily chart, March ended on its low, but April immediately flipped that direction with a swing high, and when price took out that first April swing high, it confirmed the daily structure had shifted, giving us a developing series of higher highs and higher lows. So the daily is pushing up, but the weekly is still printing lower swing highs. What we have is a significant inflection point. Bitcoin is sitting right at the 2026 yearly midpoint, a level that could go either way. This is where the market has to make a decision, and that decision will define the next major move. Now let's look at what volatility is telling us, and we measure this in 2 ways: how price closes relative to its high, and whether ranges are expanding or compressing. When we look at the yearly close-to-high chart, 2026 is currently sitting at 50%, right at the midpoint. This independently confirms what the price chart is already telling us. We are in a decision zone. Neither bulls nor bears have shown their hand yet on the yearly time frame. Dropping to the monthly, the story becomes clearer. March closed at approximately 30% close to high, a weak, bearish close. April then did all the heavy lifting, closing nearly 77% towards its high. That's a strong, bullish monthly close, and the move that drove us to the yearly midpoint. May has only just begun, so we watch how it develops. Now looking at the yearly ranges, 2026 is compressing, from a range of approximately $70,000 in 2025 down to around $37,930 so far in 2026. But here's the important context: we're only 4 months into the year. Ranges compress before they expand. A compressed range building at the yearly midpoint is not a quiet market. It's a market coiling before its next significant move. The direction of that move is what the rest of our analysis will help us determine. Turning to volume, for our positional read, we use the annual anchored VWAP, the average weighted volume price anchored to the start of each year. This tells us at what price level the average volume has been transacted for that year. We compare the last 2 years. The 2026 anchored VWAP sits at approximately $72,600, and the 2025 anchored VWAP sits at approximately $102,550. These 2 levels serve 2 purposes simultaneously. They act as a line in the sand and as a magnet. Right now, Bitcoin is sitting between them, above the 2026 reading at $72,600 and below the 2025 reading at $102,550. This zone between them is where the battle is playing out. The 2026 VWAP acts as a decision point between buyers and sellers. The market is fighting to stay above it. A break below that reading indicates buyer weakness and shifts the picture. To the upside, the 2025 VWAP at $102,550 acts as a magnet. Price could gravitate towards that level as long as the swing structure supports it. Now let's look at where price is from a Fibonacci perspective, and we keep this simple with two zones. To the upside, we have a Fibonacci resistance zone between $78,341 and $79,003. Price is currently testing this zone right now. This is not a random level. It aligns with the February and April highs we identified in our position analysis, and it sits just below the 2025 anchored VWAP. That is significant confluence at one level. To the downside, we have a Fibonacci support zone between $63,360 and $63,714, with the 2026 anchored VWAP providing an additional layer of support should price pull back to that region. Two zones, one above, one below. Price is currently at the upper zone, and how it responds here is the key question. But now let's balance that resistance with something equally important. On the chart, you'll notice a yellow box. This represents a price gap. Between the 14th of January high at $97,900 and the structural low of $60,000 on the 6th of February, Bitcoin fell so steeply and so fast that it left virtually no resistance levels behind. Price moved through this zone without giving the market any time to build structure. What does that mean going forward? It means that if buyers can push through the current Fibonacci resistance zone, there is very little standing in the way of a significant rally. The 19th of January high at $97,900 becomes the key pivot point, and the path between here and there is largely open. Resistance is right here, but above it, there is room to move. From a pattern perspective, the first thing we notice is how closely the current sideways price action mirrors a previous range we saw earlier in this cycle. When we overlay that previous range onto current price action, the similarities are striking. The previous range eventually saw a sharp drop from the top, and right now we're sitting at the equivalent level on the current range. The question is, will history repeat and we see a similar drop, or will buyers step in and break this pattern? Now, there are many patterns we watch: double tops, bull flags, pennants, cup and handle formations, but one of the most reliable tools we use specifically with Bitcoin and crypto is the price channel. From the all-time high at the end of 2025, Bitcoin has been following a clearly defined downward price channel, and price has respected those channel lines consistently. There were two visible breaks below the channel, on the 20th of November 2025 and again on the 6th of February, but both times price snapped back in quickly. What's significant right now is that we're seeing the first notable break to the upside. It's not a powerful break, but it is a noticeable one. And where has that break taken us? Straight into our Fibonacci resistance zone. That is not a coincidence. That is confluence. Separately, the structural low of $60,000 established on the 6th of February has given us a new upward channel to monitor. Late March attempted a breakout from this channel, but buyers stepped back before returning in April, as we already discussed. Zooming in closer, price is now making repeated attempts to break through the $79,000 ceiling. And here is an important principle. The more attempts price makes at a level, the higher the probability it eventually breaks through. A close above 80,000 confirms buyer strength and opens the door higher. A rejection from here indicates weakness and brings the lower side of the channel back into play. Moving to momentum, we use a proprietary indicator, and if there is enough interest from the community, we may release it in the future. What we can tell you is this: on the 8th of April, our system generated a buy signal. Then, on the 13th of April, the swing high was triggered, confirming our entry. As long as price remains above the purple EMA, our position is confirmed and the momentum structure remains intact. There are specific rules we follow within this system, and those rules kept us on the right side of this move. Alongside our momentum indicator, we also use Ichimoku, and there is one signal in particular we want to draw your attention to. On the 12th of April, a Tenkan-sen and Kijun-sen cross occurred, what's referred to as a TK cross. Both price and the Chiku span, the lagging indicator, are now sitting above the cloud, specifically above the Senku span A. What does this tell us? It tells us to be on the right side of the market. We do not want to be entering short positions until the market indicates otherwise. The Fibonacci resistance zone will tell us when price breaks or holds. So let's bring it all together with three scenarios going into next week. April delivered a strong rally, pushing Bitcoin up to this pivotal 2026 yearly midpoint and creating a weekly swing high within an ongoing weekly downtrend. Here is what we're watching. Scenario 1. Range-bound. The most immediate possibility is that price simply pauses. It takes a breath, consolidating as the market weighs up its next move. Price is currently contained between the 2026 anchored VWAP at $72,600 below and the Fibonacci resistance zone between $78,341 and $79,003 above. Price is repeatedly testing that upper zone, but has not yet closed above it. Until one of these levels breaks, we remain in a range.
Scenario 2. Bullish. A break and close above $79,000 opens the door into the $80,000 region, and if that happens, the price gap we identified earlier comes into play, with very little resistance between here and the $97,900 pivot high from the 14th of January. That gap could fill quickly, but the key word is close. So far, we do not have a confirmed close above $79,000. Scenario 3. Pullback. If the Fibonacci resistance zone holds and rejects price, the downside levels come into focus. The first level to watch is the 2026 VWAP at $72,600. A break below that is a meaningful signal. Below that, the $70,500 low is where the push higher originated from. Sellers need to challenge that level to regain control. Going into next week, these are the two numbers to keep on your screen: $72,500 on the downside and $80,000 on the upside. How price responds at these levels will give us a clear read on the interim direction. And before we wrap up, in our next video, which you really don't want to miss, we map out exactly why Bitcoin could drop 70% and trace the complete path of how that could unfold. We'll be saving our full macro analysis for that video, as it's far more appropriate there, and trust us, the picture it paints is one every Bitcoin holder needs to see. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next video. Thank you for watching. We'll see you next time. Take care.